To this, let's look at numbers as we await this week key data on US demand. Of course, the hope is that there'll be a fall in those US stockpiles in the latest week. It's a weekly kind of tick over read, and that's just a cue for you briefly before we join.
741 up from 730.
That's Baker Hughes, which GE is buying.
So you said,
as a little FYI, and our regulator gave a rubber stamp. Yes, go off and do it.
Are they buying at the top? It's rated 126%. The Baker Hughes this year.
All right, let's get a view on that one. Pete McGuire, live from XM.com in our Sydney CBD studio. Pete, welcome to you. Baker Hughes on the block. Gee, the buyer. Interesting time in the cycle to be making a tilt.
Well, good afternoon, Carson. Yes, I mean, you know, considering what Baker Hughes has done over the last couple of years, it's been a very, very strong rally across that whole US side. You know, the numbers, we wait for Mark each week, but, you know, it's been dramatic over the last, say, 13 to 14 months. The uptick. I even go one step further. If you think of what Rosneft oil, if you put your mind across to Russia, we've got their CEO saying that there's a great concern because all those OPEC cuts and all the other production cuts are going to be absorbed by the uptick as far as shale. So there's a lot of, I think, sideline players looking at it and taking on board what impact this is having globally.
Peter, Tony Farnham here from Patterson's. You look at the wire stories every time you get into work in the morning, they're always talking about how OPEC or Saudi oil minister said this, Russian oil minister said that, and that was the reason why the oil markets moved that way on the day. Is it truly at that point now, or is that just press trying to scratch around for a reason why oil prices have done that night?
Well, I think, Tony, you've got to put your mind across as far as the money managers and the hedge funds. At the present time, we're about 3 to 1 in the sense of long to short. We were as high as, I think, the best part of 8 or 9 to 1 going back to February, and putting it back to even April, we're at 5 to 1. So there's less long positions out there. That's impacting market. They're traditionally long all the time, but that ratio is being you know, crimped. And that's a real concern as far as, you know, what's happening, production numbers, and of course, you know, sitting there in the mid-40s to high 40s at the moment, well off what it was a month ago.
So I guess the follow-up question there is, are the prices we're seeing at the moment a fair reflection of the demand-supply dynamics now and expected 6 months down the track so?
Well, Tony, the Saudis are the largest producer in the sense of OPEC, and they've cut their supply into Asia and to the United States. That's been, you know, ratcheted down. They've got to consume about 700,000 odd barrels a day just to air condition the Saudi, you know, the palaces and all of the shopping malls over there, because it gets fairly warm. So that's a great impact, and we've got less production coming online, so that's going to be a handbrake. I think over this Northern Hemisphere summer, they want to see it higher, but at the moment, I think it's going to be a little bit lower.
Are the Saudis lying, though? Because reports are that actually several Asian refiners are still receiving their full allocations.
Yeah, Japan, China.
So, I mean, what to take of the talk, and then the action is not consistent with the talk?
Well, there's been, exactly right, Carson, they're hard one. It's like Chinese, you know, GDP numbers. So if you take on board what's going on, there's certainly concern, you know, you had Japan and, as I said, China, but the other ones that are not as going to get those allocation, like the likes of India and so on. But I think the roadmap is large enough that, you know, there are many swing producers out there, you know, the likes of the Irans and so on, that can fill those gaps. So at the present, that's the talk, that's the sort of, you know, the news or the noise coming into the market, and that's what is driving the position.
But Pete, the US, I think they've got about 9.4 million barrels a day they now produce, up from about 8.3, something like that.
Yes, Mark.
So those numbers are still huge. Is it just a chance that we are really stuck in a range-bound territory of, say, low 40s to, you know, modestly low 50s? We're sitting at 46.22. We're stuck right in the middle of it to an extent.
Yeah.
Is it just something that there's a lot of noise in between the two prices, but to be honest, there's a structural piece around, you know, 54 down to 44, and it isn't. It would be very hard to imagine what would change the behaviour either which way.
Well, unless you get geopolitical, or you move it across to hurricanes, which come into play in the next month or so, So you've got weather outages and seasonality. Then you've got to look at what happens as far as Janet over the next 48 hours. If you see a rate rise or talk of it, then certainly that's going to probably impact US dollar, which in turn could weaken crude. The Saudi position, the shale producers, all of that. It's a very interesting mix, and I think over the next 3 months, volatility will remain, and I think you're going to see fairly heavy swings. If you don't see any outages as far as hurricanes, then I think it'll stay reasonably range-bound. But if you see something dramatic happen, that can have a great impact to price.
Okay, Tony?
But that's, if you're talking weather events, it's just a temporary hiccup in terms of the broader thematic going forward of demand supply, surely.
Well, Tony, it can be, but if you have rolling hurricanes in that Gulf region and that, like we saw in Katrina 2005, New Orleans and so on, it's not unusual. It just depends on weather and depends on the season. It's been a while since we've had those big, you're putting your mind back to 05. Yeah. So that can really ratchet in quickly, and you just get them, cascading through that whole region. It can have a very, very tremendous effect on price. So that's just an unknown at the moment.
What happens to the Trump dollar? If you believe that Donald Trump wants a weak US dollar, and it is weak compared to where they are in interest rate settings, expectations for further interest rate settings, what happens to the price of oil or the ramifications for the producers who it's traded in dollars? What does that happen if you continue to get a weakness in the dollar?
Well, if you get a weakness in the dollar, it would normally push prices up. But if the rates go up, I mean, the other side, of course, is what's going to happen to President Trump as far as Senate inquiries, Comey, all of that's got to be worked through over the Senate in the next 12 months. So that could be a handbrake as far as his decision-making process. So it's a little bit of an unknown again. You've washed that through. He may not be able to get some of those cuts through or, incentivise and infrastructure spend and so on. So at the present, I think, if you see a weaker dollar, you'll see a higher price. If you see a stronger dollar, you'd normally see a weaker price. It's just a little bit of a wait and see at the moment, Mark.
And maybe we're waiting to see what Janet will announce she'll do after the Fed. Maybe she wants to go and run South Africa's central bank, where unemployment is running at what level, Pete, as we lose you? Here's a question without
I'd say
Pick
probably about 45%. It's a stab in the dark.
You're far too bearish for your own good. More like 27, but still.
That's the official one, Peter. Could be the underemployed taking up to 45.
Well, exactly.
All right, we could have that same debate about Australia. But thank you very much. Talk to you soon, Pete. Pete McGuire from XM.com.